Well, our stocks sometimes will go up 10 times, but they never drop 90%. Hey, everybody, welcome to the February 8th edition of Wall Street Winners. And this is the February, well, I don't know, anyway, who cares? All right, S&P breaks to new all-time highs. We got the dip that I told you about. We've rallied back up to new highs, but February is going to be a poor month as well. Let's take a look. Here you can see that, as I told you last week, the selling pressure, the little red line, was unsustainable, and it did fall off, and we saw a sharp increase in buying pressure, which drove the market really barely up to old highs. But look at the green line. The green line shows that there's no momentum in this marketplace at all. So look for the market to dip again. You might get a first few days in the week might be bullish, but after that, look for weakness. In fact, the latter part of this month should be pretty weak. Not bear market week, but correction week. NASDAQ new highs, but failed to make a new high on the little green line. That's the RSI. You need to have momentum to confirm the price action, or the price action is bogus. We've got bogus action. Seasonality remains bullish, clearly bullish, whereas utilities are neutral. Here you can see the market's expected from a seasonal perspective to drop pretty sharply. And we're using the red and purple lines right now because they fit the presidential cycle better. If we use all years, then we'd be up at the top, which would be we'd have a sluggish move higher. So sluggish move higher or correction. Right now, because of some of those other indicators, I'm going towards the correction phase. Asset allocation, though, jumped up. This is bullish. Risk indicator jumped up. This is bullish as well. Global shares are not as strong as the U.S. We need to stay focused on the U.S. rather than foreign shares, although emerging markets are doing pretty well. Yield curve continues to move higher. That's bullish for the economy, bullish for the stock market. And I like the fact that it's almost accelerating to the upside. Bonds dropping. Of course, if the yield curve is getting more positive, that means bonds are dropping. Bond key factors remain looking for higher rates. Only gold is saying we're going to have lower rates, but our other key indicators, which are the CRB and 10-year treasuries in Germany, both are saying that we should see higher rates. A dollar strong until Friday, that is, and then it weakened. But nonetheless, as we've been saying, dollar strong, head and shoulders bottom here. Looks like we could have a little bit higher, maybe up to about 92, 92 and a quarter here on the dollar index. But that means gold's going to stay under pressure because dollar up, gold down. Look at what happened to gold on Thursday. Now, it stabilized a bit on Friday, but it's not a big enough bear market to go short, and it's definitely not a bull market. So the best strategy for us is to do nothing. Gold key indicators remain negative, although the CRB is now broken out to the upside. So we do have one that's bullish, and we've got two that are bearish. West Texas Intermediate. So the interesting thing here is I've sort of been on the wrong side of this market. Remember, here at Wall Street Winners, we always admit when we make a mistake because it's very important for traders to be reality oriented, not hype masters the way our competitors are. So what's happened is that there turns out to be now a supply shortage. So when Saudi Arabia and OPEC Plus cut supplies by 1% or 1 million barrels a day, it looks like that's creating a supply shortage larger than I anticipated. Why? Because demand is stronger than anticipated, which accentuates the cut in supplies. Bitcoin starting to rally up. Purple predictor saying bullish. I've been kind of over this for the last month. I'm now turning back to the bull side of Bitcoin. So if it breaks to new highs, I'm going to get long. All right, everybody. Thank you, freebies, for coming up. I talked fast this week. I don't know why. Maybe too much Starbucks. I don't know, whatever it is. Anyway, fully paid up members, hold on for just a second.